Let's check how the TDS tax deducted at source on the salary and ITR income tax return works. Every month the employee receives salary after the deduction of TDS. TDS is deducted by the employer from the salary of the employee, since it is mandatory for an employer to meet the requirements of law, that is, Income Tax Act, 1961. So, IT Act mandates the employer to deduct TDS every month or so, as the case may be, from the salary of the employee. And he deposits the TDS with the government by the 7th of subsequent month. For April's month, TDS will be deposited by 7th of May. And the employer is required to file TDS return every quarter by the 31th day of subsequent quarter. For Quarter 1, April to June, will be filed by the 31st of July. How to track whether TDS has been deposited by the employer? As soon as your employer files TDS return, you can download Form 26 from Income Tax e-filing website https://www.incometaxindiafiling.gov.in home. Form 26 will have all the details of TDS deducted from the salary. That is, if you want to track TDS status, you are required to check the 26s. For Quarter 1, April to June, after the 31st of July. Quarter 2, July to September, after the 31st of October. Quarter 3, October to December, after the 31st of January. Quarter 4, January to March, after the 31st of May. After the 31st of May, the employee are required to file a return called Income Tax Return, ITR. Filing should be done on or before the 31st of July every year. Interest and penalties will be attracted if ITR is not filed before due date, that is, the 31st of July. However, you are required to file ITR if your gross total income is more than $250,000 in that financial year. What is Income Tax Return, ITR? ITR will have all the details of incomes earned during the year April to March. Income includes 1. Income from salary received from the company. 2. Income from house property, rental income, home loan deductions. 3. Income from business profession, business profits. 4. Income from capital gains, example sale of land and sale of shares, stock market. 5. Income from other sources, example interest received from bank and others. Calculate the income under the said 5 heads, and the said income shall be reduced by deductions to arrive at the taxable income. However, employer will provide a brief of salary in Form 16. Deductions, generally, are PCA aid contributions, LIC payments, school fee, investments in specified instruments, Mediclaim, home loan, etc. After making the computation of income on the basis of above, tax has to be computed on the net taxable income. Tax may be calculated using 2 methods viz. Old regime and new regime. Taxpayer will choose the regime which is more beneficial to him. Employee is to communicate the selected regime to his employer or company in the month of March or April. If the tax so calculated is more than the TDS, the difference tax has to be paid. If the tax so calculated is less than the TDS, then the difference of tax can be claimed as refund.